will his second emergence reshape the global financial landscape? And what does it mean for African and Nigerian economies? Good morning. It's another power-packed episode of Business Week. This week, all eyes on the U.S. as Trump's second coming has economists and investors around the world rethinking their economic forecasts. Here in Nigeria, personal loan balances are slashed by over 50% as high interest rates hit hard. And Fitch predicts a rise in Nigerian banks' non-performing loans amidst persistent inflation and interest rate pressures. African entrepreneurs also raised $250 million in October, with Nigeria's Money Point leading the pack. Plus, there's a buzz as Ghana's oil output surges for the first time in 5 years, and China, over across the east, rolls out a massive $1.4 trillion fiscal package to stabilize its economy. So, if the week left you behind, I'm Rola Kiakinkwe-Filaning, here to help you catch up as always. Stay tuned. As always, I'll start with a look at global energy commodities, and it was almost a red sweep here for global energy commodities. Look at Brent. It was down at the close of trading on Friday by 2.64% at $73.62. WTI also following in a similar vein, down by 2.99%. And concerns here around global oil demand. Of course, China came out with a fiscal stimulus package, but markets weren't really impressed. Neither were investors, dragging down overall sentiment around global demand. Natural gas held up. We're entering gradually the winter months, so no surprises there. RBOE gasoline was also down by over 2%. Let's take a look at equity markets around the world. Of course, starting with Nigeria here, the all-share index closed the week on a relatively high, up by 0.32% to close at 97,236.19 points. Over 9,000 deals, 478 million shares traded. A fair deal volume of about 9.42 billion value, and equity cap on the close of trading at 58.92 trillion naira. Actually, scoot over to Africa. Let's look at Africa's stock exchanges. It was all green shoots, I guess. And we start, of course, with Johannesburg, closed on a high at 1.02%. It seems like some of the power sector challenges in that country are finally stabilizing, which is helping companies in terms of their operations. Accra was also relatively positive, closing the week up by 0.39%. And Nairobi was also up. Casablanca did really well at 1.21%. Now, Wall Street. Wall Street, aftermath of Donald Trump's second coming, 47th president, the Dow Jones Industrial Index was up. I think there's generally bullish sentiment. Markets seem to have responded positively to the outcome of the election, at least for now. 0.61% up on the Dow. S&P index was up by 0.29%, but the NASDAQ Tech Composite Index was down by 0.20%. Let's look at my top picks from around the world. We'll start, of course, with Ghana, the first oil output increase in 5 years. Now, Ghana was producing about 178,000 barrels a day of crude oil. That amount has now gone up by about 10%. So we're still just under 200,000 barrels a day, but this is a good thing for the Ghanaian economy. Oil now contributes around 40% revenues, 40% to GDP, I beg your pardon. And actually, the government has created an oil savings account to shore up reserves, capitalizing it with around $500 million. So this is good news from Ghana, especially from its Jubilee and 10 oil fields. Let's look at what else is there. China has finally announced the details of its fiscal stimulus package. If you recall, a couple of weeks back, the Communist Party of China had mentioned that it was going to try and inject some liquidity into the economy to kind of boost consumer demand and attract investment. Now, a 1.4 trillion naira fiscal package has been announced to bail out local governments and the economy. Now, the economy has suffered from the crisis in demand, consumer demand, and of course, sectors like real estate and financial services who've been facing some serious headwinds. But also, Chinese local governments have built up debt to the tune of around $6 trillion worth of debt. Now, part of that 1.4 trillion stimulus package is meant to help them refinance and shore up their revenue base. A large part of that is actually due to declining land sales in local governments across China. So good news for China there, but markets yet to react significantly to that news. Now, Bitcoin has surged to its highest level, record level of $75,000 on Trump's victory. Now, the detail around this is that a Trump administration would encourage wider adoption of Bitcoin and supposedly weaker regulation. Well, that still remains to be seen because of concerns around cybersecurity, fraud, and whatnot. But the point is, Bitcoin is seeing wider adoption across board. Now there are 50,000 Bitcoin ATMs, automated teller machines, around the world. So you can go to a teller machine and withdraw a Bitcoin. Interesting. So good times for cryptocurrency in terms of valuation, but we should still keep an eye on regulation of cryptocurrency. And I don't expect that to significantly evolve in the initial days of the Trump administration, but we'll be watching out for that. Germany's ruling coalition has, under Chancellor Scholz, actually fired its finance minister, Christian Lindner. Now, the German economy has been growing at such a slow pace. Germany's economy is the EU's largest and most prolific economy. It's the economic powerhouse of the Eurozone, but economic growth has really been a drag, with only 0.4% expected this year. Some concerns around unemployment as well. It remains to be seen what this major departure of a major stakeholder in the German government, the ruling coalition, will mean for policy cohesion. And I'm sure the rest of the Eurozone will be watching that significantly, because the German economy contributes significantly to Eurozone growth and outcomes, economic outcomes. Now, Canada has ordered the shutdown of TikTok operations in the country. The point must be made that TikTok app access is still ongoing. So users in Canada can still access the app, but the Canadian government has said, you know what, we have concerns around data privacy, we have concerns around the ethical running of operations of TikTok in the country. Interestingly, Canada is not the only one to clamp down on TikTok. 14 countries in the last 2 years have made some regulatory move against TikTok, with some going as far as banning the app, which Canada has not done. It's just said we need to review the entire basis of your operations in this country. And in Canada, TikTok has about 9 million users. So it remains to be seen what shutting down operations without banning access to the app actually really means for TikTok in Canada. But of course, regulation around social media, concerns around data privacy, fraud, impersonation, and the list goes on and on, is a major concern in this stage of digital technology. That's it for my top picks from around the world. And now for some other top stories from around the world. We'll start with the Bank of England. In the UK, the BOE has cut interest rates by 25 basis points, even as Labour's bumper budget announcement muddies the outlook for future policy easing. The BOE's Monetary Policy Committee voted 8-1 in favour of the decision to bring the bank's key rate to 4.75%, marking the central bank's second reduction this year after it began easing its cycle in August. Policymakers pointed to continued easing of inflation in their decision, adding that further cuts could be expected if price growth remains stable. Now, in Nigeria, Nigerians continue to pay exorbitant interest rates on their debt. The amount of personal loans they owe commercial banks decreased from 7.52 trillion naira in the first quarter of 2024 to 3.47 trillion in the second quarter of the same year. This is in line with the most recent CBN quarterly economic data for the second quarter of 2024. Personal loan balances decreased by 53.9% in the first quarter to 3.47 trillion naira in the second quarter, according to the data. Still on Nigeria, according to Fitch, the global ratings agency, Nigerian banks' non-performing loans will rise in 2024 as a result of the nation's high interest rates and inflation. The agency confirmed Nigeria's long-term foreign currency issuer default rating at B-, with a positive outlook in its most recent credit ratings report. The company also estimates that by the end of this year, the banking industry's loan books would account for only 35% of its total assets. Nigeria's President Bola Tinubu has rejected the National Economic Council's proposal to withdraw the controversial tax reform bill, insisting the council follow the legislative process. In a statement, Tinubu's spokesperson Bayo Ononuga said the president emphasized that any input from the council could be incorporated during the public hearing. According to the president, the bill has already been submitted to the National Assembly, and any revisions should be handled through the legislative branch of government. In October, a total of $250 million was raised by African entrepreneurs led by the notable $110 million Series C round from Nigerian finance business Money Point. According to the most recent report from Africa, The Big Deal, which monitors startup investment across the continent, this fundraising accomplishment marks a solid performance for the month. Of the total funds collected by African entrepreneurs in October, 43% came from Money Point Series C funding alone. Still on Nigeria, major cities including Abuja, Lagos, and Kano suffered blackouts during the week as the country's electricity grid collapsed in the 10th such outage to hit the power system this year. A partial disturbance of the system caused the latest round of blackouts, according to the transmission company of Nigeria. But the transmission company didn't elaborate. Africa's most populous country has the potential to generate 13,000 megawatts, but can only transmit 4,000 megawatts due to infrastructure challenges. And finally, Saudi state oil giant Aramco reported a 15.4% drop in net profit in the third quarter on the back of lower crude oil prices and weakening refining margins, but maintained a $31.05 billion dividend. Aramco's dividend includes a base payout of $20.3 billion and a performance-linked one of $10.8 billion. Lower global oil prices, weaker demand, and prolonged OPEC Plus production cuts led by Saudi continue to impact crude prices. Well, that's it for our top stories.